Hi guys, Tim Melvin jumping back on here. Told you I wanted to try to get a little more consistent with our videos, so we're back on. It's Sunday, so a little more casual than usual. Anyway, guys, last week exactly what I've been suggesting was going to happen happened. I'm going to take a victory lap on this one. Jerome Powell went ahead at Jackson Hole. He stood up to the microphone, channeled his inner Paul Volcker, and set the record straight. He was not going to back off the pace of interest rate hikes. He was not going to slow down. He wasn't suddenly going to lower rates. And he made it plain that there was going to be pain in households and businesses across the United States, but he wasn't going to quit. The consequences of inflation remaining at very high levels is much more dangerous than an economic slowdown. Inflation has destroyed empires. Economic slowdowns, well, you can usually overcome those. Now, most traders that are trading today have never seen this before. I mean, if you were on Wall Street back in the 70s, the last time we saw this type of economic activity and Federal Reserve response, you're either long quit the game and are teaching corporate finance at a community college in a small town somewhere, or you're retired because you're filthy, dirty rich. There are still some guys around who are still active because they love the game. Howard Marks of Oak Tree comes to mind. He started in the 70s trading junk bonds and during the Milken days, early days. But he's also dirty, stinking, filthy rich. So most people trading right now haven't seen this before. Their entire trading lifetime, there's been a Fed put. Anytime the economy looked like it was going to slow down in a meaningful fashion, or the markets dropped precipitously, the Fed came in, cut rates, injected liquidity, and basically saved the day. As the reality came to pass that the Fed put had in fact expired, as I suggested a few months ago, markets sold off rapidly, and we saw that vicious 1,000-point down day. Is it going to continue? Probably. If Powell is indeed going to hold the course, continue to raise rates, then we're probably going to see a lot more selling. Now, a lot of short positions out there, guys, in both popular growth stocks and the indexes themselves. So there will probably be some short, vicious snapback bear market rallies like the one we just saw in stock prices. But the general tone of things here has changed. I think people have realized that the Fed is going to keep raising rates and it's going to hurt. And remember, every valuation model everywhere for every asset class includes interest rates as a key input. And the higher the rates are, the lower the values. That's going to get reflected. The dual pressure of interest rates and inflation is also didn't really show in the second quarter as much earnings for the S&P 500. It's going to show up in the third quarter. And one important thing to realize, the second quarter was better than we all expected, but maybe not. If we back out earnings from energy companies, earnings for the S&P were actually down about 4% in the second quarter. I think the margin pressure is really going to hit home in the third quarter. Going to have some, pretty ugly earnings being reported in October and early November. Guys, a lot was made in the media last week because, personal consumption expenditures came down to 6.4%, and that was lower than the 6.8% of the previous month. Big deal. A lot of the lower folks was because, guess what? We're releasing unheard of amounts of oil from the strategic oil preserve. If you look at core PCE, that's backing out the more volatile food and inflation, it was actually up a little bit month over month. So, look, oil is going to resume its upward march. It's already starting, I think. Natural gas never slowed down, looked back enough, and it just kept going higher. A lot of the oil price decline and the declines we saw at the pump were the result of the release of oil from the strategic petroleum reserves. Well, guess what? This can't continue. Oil inventories in the United States are at levels not seen since 2004. More importantly, oil levels in the strategic petroleum reserve, guys, we haven't seen them this low since 1985. Eventually, all of that oil is going to have to be replaced. The Biden administration is trying to do some things in the future with futures contracts to make that happen. But at some point, the oil is going to have to be physically bought and put back in to the reserve. And they're not going to be able to keep releasing it much longer. Once the release stops, well, then I think you'll start to see prices go up even a little bit more. Another huge part of the price decline has been China and the slowdown that's going on in their economy, made much worse by the Chinese government's just insistence on locking down everything when there's a single case of COVID in the region. That's eventually going to stop. China just dumped in a bunch of stimulus, $1 trillion to get that economy, kind of cranking along, and that will increase oil demand. And by the way, Powell's biggest opponent here in his inflation fight is the current administration, because they are just throwing stimulus money out there like crazy. Student loan borrowers getting a $10,000 break. That's going to put some cash in their pocket, as they don't have to make those payments. And then you've got all the stimulus from the poorly named Inflation Reduction Act that's actually throwing hundreds of $billions at various green energy projects, also inflationary. So here's where we are. It's going to stay this way for a while. Obviously, rising rates are going to have a negative impact on bonds. Stocks are probably going to be just a very unpleasant place to be. I think this is great news for banks because net interest margins are going to go up, and community and small regionals in particular are in just such a great position right now. They've been capturing market share, largely in part to their outstanding performance with PPP loans last year. So we're sticking with the small banks, heavily discounted closed-end funds. We love those here, especially if there's an activist involved, and special situations. So today, let me just kind of point you at two things that I've got my eye on. We're watching. One that I've been actively recommending and buying, and one that we haven't done anything yet, but we're going to take a deeper dive because it is intriguing. That first one, the intriguing one, is Cano Health, the symbol CANO. Owl Creek Asset Management just sent a letter to the board saying, look, guys, we love you guys. We love your business. This is just the coolest model, using primary care and, disease prevention to lower the cost of healthcare. And you're signing up new members. And it is a pretty cool little business. They own primary care facilities and pharmacies, primarily down here in South Florida, mostly on the East Coast as opposed to the West Coast, heavily concentrated in the South Florida market. And they've been operating okay. They're not quite living up to everything, but they delivered on everything that was in their presentation. They've got two problems, okay? First off, Cano Health was a SPAC put together by Barry Sternlicht's team of Starwood. It was one of the JAWS series of special purpose acquisition companies. And there is a stake surrounding SPACs right now that is unbelievable. You could have the greatest business in the world if it came public via a SPAC. People have been selling it the last year or so. So they suffer greatly from that. And then they are overly concentrated in the South Florida market. So there's kind of a twin discount. Wall Street's not really paying a lot of attention to the stock. So Owl Creek said to the folks at Cano, look, it's a great business. You've done everything that we could have possibly thought that you would do. Wall Street doesn't care. You're trading at a fraction of the valuations of similar healthcare businesses. And in fact, that's correct. Other healthcare M&A deals with companies similar to Cano Health are getting done at 3.5 to 5 times sales. And this is just Cano's trading at 1.5 times sales. And there doesn't seem to be a great runway for institutional capital to get into this thing. Now, Daniel Loeb at Third Point also has a large position. He's over 5%. And he suggested that management should consider all alternatives as well. The largest shareholder here is Barry Sternlicht of Starwood. He's deeply underwater on his position at this point. He owns about 12% of the company. So you have to imagine he would support a sale that got him out with a profit rather than the losses that he has at the current time. So this is an intriguing situation. We want to do just a little deeper dive, but I like the setup on this one, and it's a great special situation that can do well regardless of what the stock market may or may not do. My next one is talked about this before. The Sprott Physical Uranium Trust, SRUUF, is the symbol here in the United States. I think I have that right. Anyway, nuclear power has been just shunned by the green crowd for decades now. And I get it. Okay. I watched Chernobyl on HBO. It was great, horrifying, miniseries, interesting, fun to watch, scary. I saw Fukushima on the news, just like everybody else. And, um, you know, when Three Mile Island happened, I lived 75 miles away in Baltimore. So we kind of had a close eye on that when I had an infant daughter at the time. So I get it. Nuclear power is big and scary and gets all the headlines. You know what doesn't get all the headlines? All the hundreds of plants that have been operating around the world for decades now, and all of the vessels and submarines that are at sea powered by nuclear reactors, where we haven't heard a word about problems because there haven't been. People operated them correctly and safely, and all they did was generate low emissions, low cost power. If we really want to get to carbon net zero, and personally, I think it's a great idea. The current plan for getting there doesn't work, but if you include nuclear, we get there. And guess what, guys? We're going to use a grim statistic to determine this. But if you go by deaths per terawatt hour of electricity produced, only solar is safer than nuclear. Wind power kills more workers than nuclear power. That's the truth of it. That's the math. It's the headlines that get all the attention. The fact is, it's the safest, cleanest generator of electricity known to man right now. And it needs to become a bigger part of the solution. Now, that's becoming obvious to some countries, particularly in Asia, where there are 50 reactors under construction. There's 90 more being talked about in various places around the world. The United Kingdom and Europe are starting to get it. They're extending the life on many of their plants. Now, Germany still doesn't get it. They're phasing out nuclear. They were hoping to be out by the end of the year. It was the original plan. They've got a few reactors left, and they're not going to extend the life on them. Guys, they're going to be burning wood in Germany in 3 months to stay warm. And their aversion to nuclear power, even though they've never had an accident, is just taking them politically down a road that's going to lead to a legitimate energy crisis in that country. In fact, in Switzerland, which was also phasing out, there is now a movement afoot because they have a direct democracy. They can vote to change into the constitution by a popular vote. They're circulating a petition to bring the idea of, hey, wait a minute, we don't want to be paying triple the last year's price for electricity any longer. Let's get this nuclear energy thing back up and running strong to provide energy. Because the solution, if we don't, is to rely on Vladimir Putin for natural gas, or somehow hope the United States, and we can't, by the way, right away, can get us enough liquefied natural gas to meet our needs this winter. Unfortunately, we can't. We may be able to help them next winter. We can only make a minor difference at this point. So nuclear energy has to be a part of the solution. Now we've got small-scale reactors coming. NuScale just got their design approved to move forward. Small-scale reactors that can power individual industrial facilities, smaller cities, towns, much safer, much less potential damage if something does go wrong than the unlikely event that that happens. So the true path to green has to include nuclear power. Now, hopefully I didn't sound too much like George Bush there with my nuclear. The last uranium bull market in the 80s, I believe it was, we saw uranium prices quadruple. Now, the situation today is set up for at least that big a move. Guys, we have financial buyers, including the Sprott Trust, have taken an enormous amount of uranium kind of out of the market. They're holding on to it for investment purposes. It's the highest level ever, I'm told. And then we've got a lot of capacity because we did have years of low uranium prices that were just kind of bogged down. People took plants out of production. There was no need for it because they didn't feel like the demand was there. Well, the demand's coming on, and it's coming on fast because, as I said, there are a lot of nuclear power plants being built around the world, more in early stages, and everybody that's got them is looking at extending the life of them to deal with what's going on in energy markets and realizing, hey, this truly is part of the path to carbon net zero. Um, so demand's going to go up. Supply is deeply constrained, starting to see some signs of it. Prices have started to move. I think they're going to go a lot higher. I don't think you have to bet the farm on the Sprott Physical Uranium Trust, but they do own about, I think it's 32 million tons of physical uranium at this point, in the form of yellow cake. And I think the value of this thing's just going to explode higher and continue to explode for an extended period of time as the world comes to realize if we really want to go green, we're going to have to include nuclear. And I think that happens. I think that this will go higher no matter what the stock market does. It's as much of a commodity play as anything else out there. I just think you should have a little bit of it in your portfolio because the potential is enormous. So anyway, guys, that's all from me this week. Enjoy the rest of your Sunday. I just wanted to check in, share a couple thoughts with you before we move in to what is surely going to be the madness to follow this week in the wake of Powell's remarks last Friday in Jackson Hole. Thanks a lot, guys. Enjoy the week, and I'll be back to talk to you real soon.